strategy about what's going on inside Washington, D.C., what regulators and lawmakers are thinking and working on, and what you and your credit union should be focused on in terms of risk areas and areas of opportunity. I'm your host, Ann Petro, SNAFCU's Vice President of Regulatory Affairs, and today I am joined by Jason Cave, who is Deputy Director and Head of Fintech Strategy at the Federal Housing Finance Agency. Jason oversees the agency's look into innovation and the use of technology in mortgage lending and servicing. Thank you, Jason, for joining us today.
Well, it's great to be here, and thanks for the invitation.
Yeah, I'm thrilled to have you and to talk about what the FHFA and your office has been up to lately. Let's dive in, if you don't mind.
That sounds good. Well, first, I want to thank you and NAFCU for your comment letter. You guys provided us some very good insights when we started our journey. Oh gosh, last July we put out an RFI. Wanted to get the best thinking of participants in the market on where we should engage in this fintech journey. And your organization provided us with some good advice, good counsel, and importance of working with NCUA. So we've been working with Charles Weiss over there, who's their fintech officer, and reaching out to credit unions to get a sense of what it's like in the ground for adopting some of the current tech. So really appreciate that. Your comment letter, I was looking at it again today, talked about the importance of addressing the challenges of consumer adoption. And it reminded me that, we can create the best mousetrap, we can create the most brilliant technical solution to any problem. But if we forget the customer experience, forget it. And I think it's probably why, credit unions are on the cutting edge of some of this, because, credit unions generally start with the customer need and then go there. So, I've had a bunch of discussions with credit unions of all sizes, and I'd say they're definitely tech forward and trying to find, just the best, most efficient ways to scale the technology so that they could deploy it in the most cost-efficient manner possible. I think that's always a challenge. It's easy to adopt a new tech platform or new piece of software that's going to solve all the problems, but that's an expensive, proposition. And if you can't get the efficiencies up front, it ends up, it can end up being more expensive than what you were going into. So I think some of those challenges are important for everyone to better understand. So I've been, really enjoying some of those discussions. So.
That's great. I'm glad to hear that you've had a lot of productive conversations with credit unions and with Charles Weiss at the NCUA. He is fabulous. And that, collaboration between agencies is really important, especially in an area like this where, technology can have such an outsized impact on institutions. And I think you're 100% correct in saying that credit unions always put their members first. I mean, we know that, and I'm glad that, the FHFA and others are recognizing that as well. Technology can, really revolutionize the way a consumer interacts with your institution and organization, but it can have its pitfalls, and adopting new systems and platforms to legacy platforms can create a host of problems. And so thinking about the consumer experience is definitely top of mind for our members.
It was we talk about spent a lot of time with Fannie and Freddie on some of their automated underwriting systems and tools, Day One Certainty and AIM, which have the potential of really creating some efficiencies, both in the cost of getting a mortgage and the time to close, and using direct source information, which all sounds very good. But in talking to some credit unions, it really opened my eyes to the fact that some had stopped using some of those tools because they found it was more expensive than doing it manually. And that was a real eye opener to say, well, that's if that's happening, we need to dig into that. That's not the normal, evolution of tech to go towards that to then say it's too expensive. Let's go back to manual. So it's like, what's going on there? What's causing some of those challenges? And so those sorts of direct discussions help a lot. We can go back to the enterprises and say, we're hearing that elsewhere. What are some of the pain points, and how can we, with the vendors, find solutions to allow better deployment. So I really, again, just want to thank your members for being very very honest with those things. It helps.
Good, absolutely. So could you, briefly describe kind of broadly what the purpose and focus is of the FHFA's Office of Financial Technology, or OFT? What has the office been focused on so far?
Sure. So we were relatively new. Director Thompson, when she became the director, had spent a lot of time on interagency groups such as FSOC, and had seen many of these offices in action at CFTC, SEC, OCC, and the like, and asked me to look into it to see if it made sense for FHFA to set up an office as well. So we spent a lot of time with those agencies, found that having a small group to go deep on the tech made a lot of sense. It helped their principals and senior staff develop more informed policies to really understand the current issues and challenges going on in that space. We looked at some of the challenges in mortgage, in an environment where tech has been around for upwards of 10 years. Plenty of fintechs doing different things in the mortgage space. It was interesting to see that during that time, the cost of getting a mortgage almost doubled, and the amount of time to close a mortgage really stayed about steady at about 45 days. And so we kind of said, that's not a great set of numbers to say that innovation is actually, having some foothold here. We would have thought costs down and getting a mortgage a lot quicker. So one of the first things we said is, makes sense to have an office, and it makes sense to talk to everybody that's part of this process to find out where the pain points are. Where's tech working and why? But more importantly, where is it not and why not? And how can we collectively do a better job in those areas? So we've, that was the basis behind our Velocity TechSprint, which we did our first ever tech sprint with the great help of Joanne Barefoot and the Alliance for Innovative Regulation. We just put out a podcast talking a bit about that event today. And we had 80 people from all over the mortgage system come together in, what was that, in July, early July, so right in the heat of DC summer, to tell us, and we didn't give them a lot of time. We threw them all together. We mixed up people. We created the teams. We created the problem statement, and we gave them a very short amount of time to pitch a bunch of judges on ways that we could make some improvements, both reduce cost, increase efficiencies, and make it a more consumer-friendly and inclusive process. So it was a great event. We're going to have more of them. We are now digesting the many great suggestions that we received. We're going to bring the teams back to do a little bit more of a deep dive. We might even get Director Thompson to stop in for some of the sessions, and really with the idea of what can we make actionable? There's a lot of problems. You can boil the ocean, a lot of interesting ideas, but what are some, base hits that we could make in a short amount of time? What are some things that are going to take longer, going to take a lot of people to come together? to get their arms around, and then what are some that are really what I almost call like moonshots, really long term things that you know we need to start building the tracks today for, but we might not see the fruits of it for 10 years, 20 years. So we're doing that now, and I think making some good progress there.
Great. So the recent tech sprint that you mentioned addressed the question of how data digitization might drive transparency and increase access, fairness, affordability, and sustainability in mortgage lending. Why did you decide to start with this question?
Sure, sure. Well, we thought it made sense to start at the beginning. So, the mortgage process, many steps to it. Many people do different things. It really is when you think about it, we're producing a mortgage. It is like an assembly line or any sort of manufacturing process. And along the way, there's all sorts of challenges and bottlenecks. But let's start in the beginning. And so that's why. And also, it's an area where the enterprises have put out some great tools. Like I said, day one certainty and AIM and some of the software that supports those tools. They've been around for a while. Adoption rates have not been great. So kind of thought it'd be good to start in the beginning and also start with something where there's actually been some work done to then really kind of try to diagnose what's been holding it back. Why are adoption rates in the low 20s, and how could we get it to the 50s? What would be what are some things we need to do, and also, if we do increase adoption, how much does it move the needle? That's a question too. Are these tools really fit for purpose to actually move the needle on costs and efficiencies? Or do we need to look at them again with a different lens and say maybe we need to be more ambitious? I'd say one of the things that the going into the sprint, I thought we'd get a lot of people to come up with some very specific process improvements, but the sprinters really challenged us to think beyond the current set of tools and be more ambitious. So a lot of the ideas we had, dealt with coming up with really new processes and where we could maybe get away from trust and get to truth. Come up with databases that could really do things more real time and rather than sequentially. So kind of change the conveyor belt a bit. And so I was really excited to see people to say, let's do a little bit more out of the box thinking. Let's think longer term. Let's understand that, the way things are going, getting a mortgage will likely be very different in 20, 30 years. That could be good or bad. Let's use today as an opportunity to make it a better process. So that was really a good to see.
Oh, that's great. Now, how has the increased digitization of the mortgage lending process, so far impacted lenders and borrowers? It sounds like there's been some improvement, but a bit of stagnation.
Yeah, I think it's like anything else. It's this process is geared towards if it's working, let's not change it. And depending on who you ask, it's working just fine. So I think that's one of the things when you have a lot of different people in the process with a small window into a piece of it, you find out that they think that they're moving their piece along just fine. Thank you. It's when you look at it from a totality to see that's $13,000 is a lot to produce a mortgage. 45 days is a long time to take. And when you look at it from that standpoint, you get a different view. And so, digitalization of the mortgage process, that might sound like a great idea, but to the loan officer on the front line, it might be easier just to go with the two pieces of paper and say, give me this in hard copy. That makes my life easier. But, as you then take it through the process, and then the documents are not perfectly uploaded, or there's questions, you're dealing with paper versus databases and the things, so that later on in the process, when somebody needs something, it's a lot easier to be doing it in a digital manner than then going back to the paper. But it really depends, like that, who you talk to in the process. That frontline person might say, well, that works perfect for me. So it's, again, you have to really start to look at it, bigger picture, top line. But when you could see why at any given stage, adoption might be a challenged. If the front line saw right out of the gate a big efficiency play from their standpoint, you might have greater adoption levels. So it's important. That's why we spend a lot of time talking to each and every person in the process, because you get a different story. A lot of times people say, we're doing fine, it's somebody else. And I tell everybody, I'm like a cop. I'm going to talk with everybody. We're going to get the whole story. So don't worry. You could tell me it's somebody else, and they'll tell me it's you or somebody, but that's okay. But we really want to get as much factual, solid evidence of where the challenges are, so that we can come up with, with workable solutions. I don't think we're not, I'm relatively new to mortgage, so I have to be very careful. A lot of these things have already been identified by people. So it's not as if I am, solving something that people haven't spent a lot of time on, but we're just trying to put another, take it maybe from another approach, and working closely with the enterprises. They're a key partner. Their role and the tools that they provide, are key. So really also making sure that whatever we come up with is going to actually solve some of the challenges and not create new ones. So
Right, right. Well, I definitely think it's human nature to point the finger at somebody else when you're intimately involved with a process. But it sounds like your office is doing some important investigative work, and you'll get down to sort of the root cause of maybe some of the inefficiencies in the system, and then be able to come up with, and through this tech sprint process, innovative solutions and changes to create some actual efficiency going forward,
yeah.
and help consumers save money, right? That ultimately is a big part of the goal. How many stakeholders did you have participate in the tech sprint, and what types of organizations were participating?
Yeah, so we had 80 participants. I think it was upwards of 60, 65 separate organizations. We had really everybody. We had lenders, we had mortgage insurers, we had the fintech providers of all sizes. We had, yeah. So it was a good mix of. We had some investors. We also augmented it with a lot of sessions. We had some webinars and some other events. So we brought in, again, like venture capital types, so that we can get a full perspective on the challenges and opportunities. So we had a really a good following of people like senior product managers, and people that were not way up in the C-suite, but people that were actually having to develop, having to integrate solutions, both as lenders and also as providers. So people that actually really were at a level where they could come up with solutions that were fit for purpose. So it was a good level of attendees, and a lot of excitement. We're going to be putting out a video of the kind of some of the key highlights of the event, and a write-up that goes
Outcome
over.
or sort of
Yeah,
takeaways from that. Sounds
takeaways. So
forthcoming.
yeah, that should be coming out. Yeah, that should be coming out, I think, later this week. So we've got that. Like I said, we're going to be following up with the teams to do a deeper dive, and we'll probably do another one of these events. I think our view was the tech sprint was a good model to address some of the challenges that we're facing. You go to a conference and people moan and groan, and you have these bilateral discussions, but they can only get you so far. I think having people come in from the different areas and really try to work on it together, I think we found was a good approach. So we will do more of these. All of these ideas will require us to go deeper, and so we expect to use our network and hopefully get some additional participants. Hopefully, there's people that say, "Gee, wish we were there." So hopefully, we'll have some FOMO going on here, and get some more participants for our next ones. And there's a lot of other ideas. This
Mhm.
adoption of the digital technology is one of the things we're working on. Clearly, we're working on AI, ML, to see where the best use cases are in the mortgage space, and there's many of them. So again, it's what are some that are going to provide the greatest impact, working with the enterprises so that they're looking at these tools in a test and learn environment. There's whether it's Gen AI, large language models, these things hold a lot of promise, but there's also, some important byproducts to understand associated with them. So how to do it in a way where you're taking it offline, but you're making it as real as possible, but not impacting current systems before, so that, again, I call it test and learn, so that you can see whether this actually is going to add incremental efficiencies without adding a whole lot of other risks. So working with the enterprises, I think everybody, this is a big area, and some of the tools can really take some of the back office, redundant, boring tasks that have to be done and streamline them. And so I think there's a lot of promise there, but again, also some challenges. So we're looking forward. We think that's there's a lot of potential there. Blockchain comes up. We want to take another closer look. Blockchain or distributed ledger technology. On its face, you look at what it's doing in other companies and supply chains, and you say, seems like this would work well in mortgage. Why hasn't it? Is it legacy costs? Is it who pays the bill? Or is it just that it's not needed? We're not sure yet. So, but we want to really study it before coming up with a conclusion for or against it. We think that it's definitely has some value, but it's important to also understand that there has been a pretty big legacy systems put out there, and somebody's got to pay for all these things. So trying to make sure we're being practical and smart there.
Right. Yeah, those existing costs don't just disappear overnight.
Right.
Yeah,
Right.
so making that transition can be challenging, and certainly your point on artificial intelligence and machine learning. I mean, there's a lot of promise there, as well as with the use of distributed ledger technologies and blockchain. But of course, with AI and ML, I mean, some of those data sets can be inherently biased. Of course, the administration at large, including the FHFA and the banking regulators like NCUA, are working to eliminate appraisal bias. And so that's part of a larger discussion. A lot to break down there with the use of these new and emerging technologies, certainly.
Yeah. No, I mean, they have the potential. It's like anything else. Their potential for good and creating greater efficiencies, issue spotting, risk identification. They can take things and move forward at a much faster speed. But just like anything else, at that faster speed, if there is a problem, the risk shows up faster. It's not as always as easy to catch. and its impact is magnified. So that creates all the need to also make sure any of this is done in a control environment that's geared towards this new technology. So yesterday's risk controls and governance are likely not going to be sufficient to contain and deal with some of these things. So making sure that that stays at pace there. Yeah.
Now you mentioned that there are some like fintech like companies that participated in this tech sprint. Now, fintech companies have steadily comprised a larger or growing market share for mortgage lending and servicing. Have you identified any challenges with the increased market share of fintech companies in the mortgage lending and servicing space?
We haven't really dug into. That's a good question, and we have not, I think, spent a lot of time on that particular issue. I think it's really been, you know, what's the scale that some of these companies can provide. It's challenging. There's some great companies out there with some interesting ideas, but how do you scale that to some of the large lenders or to Fannie or Freddie so that they could actually use some of these tools? And also, what's behind the ideas? What's the importance of vendor management? All of a sudden, this looks like an interesting product, but how solid is it? How have the algorithms been tested? Those are key things as well. So I think that many of these fintechs, they provide an important service because large companies are often not able to be as nimble. So some of the things like we use in our house are tools that are very helpful, whether it's financial education with my kids. And I could say, gee, why didn't the bank come up with this? But there's a lot of other things going on at some of the big institutions, and so some of these fintechs are able to sort of focus on some particular issues and come up with some great ideas. So I think we've benefited a lot from the innovations, and our idea here is to just make sure that we're embracing it, that we're helping nurture these ideas, but also being smart about it, making sure that we understand that they need to have the systems and controls in place as well to play in this space. You're dealing with when you're dealing with mortgages and lending and the home. This is one of the most important assets, and so it's the trust has to be there, the transparency has to be there. There are many people that are like, I'd rather deal with somebody in person. I don't want to be dealing with online. I don't want to be given my password and log into some company. And so, again, we need to be making sure that anything that's done here is from a place of promoting and enhancing that confidence. And so that's key as well. So it's a challenge. I think these companies that are coming up with these ideas, and right now the market is pretty choppy. And I think some of the venture capital money that was maybe easy to come by a year or two ago is not today. So it's a challenging time, I think, to be a fintech. So
Your view, what does the current competitive environment look like for mortgage lenders and servicers? Has it changed dramatically?
I mean, I think in some respects, I mean, I think you're seeing, we've seen a shift both from banks to non-banks in doing certain things. I think that the size of companies that's shifting, just the relationship of when I got my first loan many years ago, dealing with a lender in person, in an office. That's not the case. Even if we're not talking about cutting edge tech, that relationship has changed. And And I think, it's important to make sure that the basic arrangement and expectations are still there. But I think it's depending on how you look at the question, what's changed. I think you could say everything in some respects, and in others, when you think about the efficiency in all of the many steps of the process, you'd say this still seems like it's 1970s in some respects. And some of that might be good. I don't want to say that. First off, I was born in the 70s, so there's nothing wrong with that. But the point is that where it should be? Are we using that technology because there's either not an interest or ability to invest in the new technology, or is it that it's still working just fine? Thank you very much.
Yeah, we'll have to continue to parse that out and get to a solution or solutions to move forward. And that's, part of what your office is tasked with and what these tech sprints will help figure out.
Yeah. Yeah.
What do you think the mortgage industry will look like in, let's say, 10 years as technology continues to evolve and, be adopted by more and more players in the space?
Yeah. 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 It's interesting when people talk about it at conferences, these ideas that what it will look like. People often say didn't change that much, but I would hope that we have processes that are adopting. So we're kind of looking at tech in different industries. I think sometimes that if you focus just with mortgage people, you get changes that are sometimes on the margins interesting, but it's when the companies that are bringing in people from whether it's publishing or media or other supply type environments, bringing them in to say, gosh, we had that problem in auto or whatever, and we made these changes. And, we also had to make sure up and down the line there was a rigorous trust process, and we did it this way. The thing I always think about and why blockchain is interesting is so much of this is sequential. The information doesn't go to the next person in the chain until somebody has looked at that data, done their work, and then moved it forward. Well, I'm not saying that that's wrong, but it's not the most efficient way to do it. I mean, if there was a way to have a source of data where different parts of an organization can plug into it at the same time and say, got what I need, and then move it forward, I think you'd have a more efficient process. So, we'll hope that there'll be some improvements there. Hope that there'll be some advances there, so that right now I think there's a lot of times consumers provide their information a lot faster than they did the first time I got a mortgage. It took me forever to pull information together. So nowadays people are doing it much quicker, but it's still taking a while. So where's it sitting in the process? And how could we make that go faster? And then again, using the AI and ML tools to allow people to really understand what's going on through the process. Better prompts, better. Here we are. We're 3 days away from close. You better have this, that, and the other thing. I could tell you a lot of times with me, you wouldn't hear anything, and then all of a sudden you get some call from somebody to say we're closing tomorrow, and you're running around. We should be able to have a process that kind of keeps the consumer better informed as to where things are going. So I don't know. I have a lot of hope that we will have not only a more efficient process, but one that's also more customer friendly.
Yeah, it may take some time, but getting to a place where, what you described with the sort of multiple work streams, leading into the final product through a much shorter time frame and window, with a lot of communication to the borrower and consumer seems like a good end result. But it may take a lot more tech sprints to get there.
Well, one of the things we ask ourselves a lot of times is why do we demand certain efficiencies and speed at Starbucks or at other services throughout our day. You think about the things that you put up with, you know, 5 years ago, 3 years ago, 6 months ago, that you're like, I expect faster, more efficient, right? And there's many of them. And you say, why not in mortgage? And, part of it might be, you know, people don't get a mortgage every day. This is not it's not something that you do often. And so you endure it. And so, there's reasons why, we do it. But, I think we can do better. And I don't think that that's a reason to say, people don't have to get a mortgage every day or every year. So, we don't need to make this an efficient process. I don't think, and again, I think there's a lot of people out there that want to make it a better process, but I think that's something that allows some of the status quo to sort of seep in, to say, people aren't demanding it because it's not something that they have to deal with on a regular basis. Those things that we deal with on a regular basis, think about you, Anne, or me. We've we've got a lot of greater efficiencies there because, right, we're like, we don't want to do it that way anymore. So, but I do think that's something that's kind of helped mortgage perhaps be sort of on the back burner as to where we can go. But an important point from our standpoint is $13,000 is a lot of money to produce a mortgage. Most of that is borne by the borrower. And there are many borrowers that were shut out of an amazing period to refinance because of those costs. And so when we talk about it from an access standpoint, which is very important to us, to the extent technology next time can allow greater participation so that people that are stuck in much higher mortgages can get the benefit of that, that's an important thing. So when we talk about access, it's important to talk about how, the technological advances or lack thereof are a factor there. So
Yes, absolutely. And there can be a generational impact there as well. So
yeah,
it's important to prioritize those individuals and find ways for everyone to have access to the same benefits as markets ebb and flow. So
exactly.
any
Yeah.
other closing remarks for our viewers and listeners?
No, this is great, and I appreciate it. I'd really ask that credit unions continue to reach out to me in my office, provide us feedback, attend to the extent you can the events. Again, I think credit unions are at the forefront of a lot of this, and it's important to make sure that your voices are heard as we move forward with some of these ideas. So really, thanks for having me here today, and for staying engaged.
Well, thank you. And NAFQ would be happy to facilitate any of those conversations. So if anyone listening to this is interested in getting in touch with Jason, you can always get in touch with me and I'll get you in touch with him and we'll keep the conversation going. So thank you again for joining me today. It's been a great discussion. Thank you to our viewers and listeners for tuning in to this episode of The CUPP about the use of technology in the mortgage process with FHFA's Jason Cave. If you enjoy watching or listening to The CUPP, please hit the subscribe button, turn on your notifications, and hit the like button. Please leave us your comments. Let us know how we're doing. We'd love to hear about any topics you'd like to hear on a further episode of The CUPP. Thanks again to everyone, and thank you, Jason. Until next time.